Hello and welcome to the C-Suite of the Open Video series with TMX Group. My name is Omar Khafagy, a client success specialist based in Toronto, and joining me today is David Taylor, the CEO of VersaBank. Hello and thanks for joining us, David.
Well, hello to you, Omar. Pleased to join you.
David, can you tell us about VersaBank, your business model, and how do you make money for investors?
Well, like all banks, we gather deposits, and in our case, through partners all throughout Canada, and we lend those deposits out at a higher rate than we paid, and earn a net interest margin. In our case, our net interest margin is about 3%, and it's one of the highest in the industry. That gives rise to net interest income, and from that we subtract our fixed costs, which leaves profit for our shareholders.
And David, can you talk to us about what are some of the risks that you faced as a company in general, and now that we're facing a worldwide pandemic?
Well, the principal risk that any bank faces is credit risk. And we started out with the idea that we'd have a very low appetite for credit risk, being a small bank. So we target niche markets that are not quite as risky as others, and we structure in such a way as not to take on a lot of risk. Another risk that all banks face is liquidity risk. And the way we mitigate liquidity risk is by having an expansive network of deposit partners who send deposits to us digitally each day. Final one, principal risk that banks face is operational risk. And operational risk, under COVID-19, has been a tremendous concern for the very large financial institutions who have a lot of people and for the most part in tight offices. We, of course, as a digital bank, don't have those issues. We're quite easily able to operate remotely. In fact, we are operating remotely. It's a bit of inconvenience. We like to see our folks from time to time. So those three principal risks we over the decades have had well under control, and it's worked out quite well for our bank.
David, I know that VersaBank has a technological advantage in comparison to the other banks. So can you talk to us about that tech advantage that you have, and maybe when you're talking to investors, how do you describe VersaBank as an attractive investment opportunity?
Well, we're unique in the banking industry, I believe, in that we are really a software company with a bank license. And so this has given us a tremendous advantage to target niche markets. We can develop rapidly custom software solutions for the niche markets that we see available. Those are markets that are underserved by the larger financial institutions for some reason. They could be geographically distant, or they could be too small, or they could be some unique feature. But our software team's easily able to provide a solution, a rapid solution for that.
And David, what are some of VersaBank's future growth opportunities?
Well, we see a huge growth opportunity in the point of sale financing program. Mind you, with COVID-19, there's very little point of sale financing taking place. But we'll expect that to rebound when the COVID-19 is behind us. Other areas for growth, our project finance team that traditionally does multifamily residential projects have pivoted in an area that they were quite prevalent in the past, and that being public sector finance. And we see a lot of public sector projects coming. And finally, the banking that we do for the insolvency professionals in Canada, of course, is a growth industry. Kind of sad to say that, but it's likely a very big growth industry. And this is a supplier of deposits for us, low-cost deposits. In fact, at today's rates, they're zero. So there's a flux of low-cost deposits coming into our bank, and likely to be for a few years, that enable us to lend this out to lower risk markets and still earn that extraordinary high net interest margin.
Finally, being listed on the TSX since 2013, what does that listing mean for VersaBank?
Well, it's given a wonderful opportunity for individuals and and funds to own a piece of our growing business and get in and get out as they see fit. Secondly, we have some significant growth opportunities, particularly with COVID-19. And even though we have a lot of capital, maybe 4 times the regulatory minimums, 3 times the industry amounts, still with some acquisitions, we may need to raise more capital. And it's wonderful to be listed on the TSX because, of course, it facilitates that and gives the opportunity for other people to buy into our bank.
Lots of great insights from you, David, today. So thank you very much for joining us, and thank you for it's been a pleasure chatting with you today.
Oh, it was my pleasure. Thank you.